Steve, I want to get your thoughts on the Naira stability today. It's only slightly changed. Recently, we've seen it weaken a little bit. So are we seeing a little more supply supporting the Naira today?
Actually, we've not seen so much of supply in terms of the currency so far. If you look at what we opened at the beginning of the week, we've actually seen the currency actually weaken. At the beginning of the week, we opened around 157.0515, yeah. And over the time, we've seen that currency trade around 157.7585. In terms of supply, there have not actually been any supply, and that's actually explained the reason why we're seeing the pressure on the currency so far this week.
Okay, and let's move on to the bond market. We do have an auction coming up later this month. I want to get your expectations on that. We've seen yields come down significantly over the last few weeks. Now, at virtually the entire yield curve, maybe apart from maybe the really long-dated bonds, are under 12%. So your thoughts on what we're likely to see in that auction? Because we did see some surprises, I think, at the last auction.
For the auction coming next week, we've seen the DMO actually come out with the amount on offer on different maturities. For the 5-year, we've seen them put 16 billion on offer, those sizable numbers. And on the 7 years, June 2019 maturity, we've seen them put 30 billion on offer. And on the 2022 maturity, we've seen them put the equal size of 30 billion on offer. I think judging from what's been happening or the experience we had in the secondary market for the couple of weeks, we expect to see a strong demand across all those maturity, and considering the fact that this is going to be the last auction for the year, we expect to see both offshore inflows, offshore interest, and the locals performing in that particular auction. In terms of expectation, we expect the 5 years to print between 12 to 12.1. While we expect the 7 years to be between 12.05 to 12.15.
But where is the current 5-year right now? Is it? Are you suggesting that it's going to bounce? The yields are going to bounce slightly higher there?
Well, if you look at the secondary market right now, the 5 years is actually hovering around those that particular level that I mentioned. Yeah, okay. It's trading around between 12.05 and 12% right now. So we don't expect to see any much change in that particular maturity. And if you look at the 7 years and the 10 years, they are trading around 12% too. So we expect that 7 years to be between 12.05 and 12.15. The demands on the 10 years have actually been very huge. We've seen so much demand coming through from the offshore investors. We've seen the local players actually taking positions in that maturity too. And the reason being the fact that that bond is one of those ones that actually been listed on the JPI index.
All right. Okay, and let's move on to the T-bill market. Recently, I think they were about, 13, 14%. What are yields looking like now in that space?
For T-bills, we're actually not seeing so much difference in terms of yield for some time now. They still revolves, in the terms of yield, still revolve around 13% and 12% on the long-dated instrument. We actually have an inverted yield curve when you look at long 1-year bills. They're trading around 12.7, 12.65 yield right now. And if you look at those
let's stay on that point. Why do you think that's the case? Why is the longer T-bill, the 1-year T-bill trading at a lower yield than the shorter dated T-bill?
Well, the reason on that actually being the pressure that has been seen from the offshore investor, who are mostly interested on the 1-year instrument. And if you look at the belly of the curve, the 182 days and the 91 days, we've been seeing so much supply coming through from the OMO offer. And that has been happening almost every week. So I think it's a basic theory of supply and demand coming through on that particular part, maturities.
I'm trying to get the sense from the various banks as to where they think the Naira is likely to trade next year. What are your thoughts on where it is? 157.80 today, where do you think it's likely to be for the most part of next year?
For next year, it's going to depend quite a lot on a lot of factors. And if you see so much of interest coming to the Nigerian market in terms of offshore interest flowing into equities and government securities, the possibility is there that we're going to see a lot of support around 158, 157 levels, and maybe slight appreciation to 156 levels. But to notice with time that once this thing closed down slightly lower than the CBN effective rate, which is trading around 157.33 right now, we see quite a lot of demand coming through in terms of both locals and probably some corporate demands coming through in that particular that sense. So I think going forward for next year, if the exchange, if the external reserves still remain robust, and inflows actually coming through from the offshores, coupled with sales from oil companies, I think it's going to see a lot of support on the currencies, and it's going to over between 157 to 158 levels.
And for bonds, your thoughts on that? Some people are suggesting we may see single-digit yields. Do you think that's possible?
Well, I think the possibility is actually high on. As in, inflation is actually expected to drop between now and the first quarter, and possible reductions in the MPR at the next MPC, or probably before the end of first quarter. And looking at the amount that actually be on supply in terms of security going forward in next year, with the government trying to reduce the amount of borrowing, the possibility is there that we're going to see some single digits going forward.